Hi traders, you are welcome to this video where I'm going to be talking about the Ergodic Candlestick Oscillator. Okay, we're just going to be breaking down how to use this indicator effectively. All right, if you are looking to refine your trading strategy and gain a deeper understanding of market momentum, then this is the perfect video for you. Now, the ergodic candlestick oscillator may sound complex, but trust me, it is not as intimidating as it seems. Once you understand how it works and how to interpret its signals, you will see how much it can enhance your trading strategy. What is the ergodic candlestick oscillator? Let us start with the basics. Okay. The ergodic candlestick oscillator is an advanced indicator used to analyze market momentum. This indicator combines two well-known concepts, which are moving average convergence divergence and candlestick patterns. Okay, it uses this combination to give us a clear picture of price movements. Now, in essence, it helps you spot the trend direction and momentum shifts more accurately than many other oscillators. Unlike traditional indicators that just follow the price, the ergodic candlestick oscillator adds the dimension of candlestick analysis, making it a valuable tool for those who want to dig deeper into price action. What makes this oscillator unique is its ability to smooth out the noise of the market. Instead of giving you random signals, the ergodic candlestick oscillator filters through these fluctuations, allowing you to focus on the bigger picture and identify trends with more precision. Now, how does the ergodic candlestick oscillator work? Let us break down how the ergodic candlestick oscillator works in practical terms. It is based on two key components, which are price action and volume. By measuring how price and volume interact, the oscillator identifies potential shifts in momentum, trend reversals, or the continuation of an existing trend. This makes it a versatile tool for various trading styles, from scalping to swing trading and even longer term trend following strategies. So here's how you can read the oscillator's signals. Okay, first, let's talk about positive values. When the oscillator is above the zero line, it indicates that momentum is bullish. You can see what happened here. Right from this time all the way up to this point, you can see that the oscillator was above the zero line, indicating bullish momentum all through this period, right? In this case, prices are moving higher and you can expect upward trends or buying opportunities. Now, let's talk about negative values. All right, let's talk about negative values. When the oscillator falls below the zero line, it shows that momentum is bearish. This could signal a downward trend or potential selling opportunities. And you can see that that's exactly what happened here. We had a selling trend, as you know, while the oscillator was below the zero level in the negative territory. Now, talking about divergences, one of the most important signals from the ergodic candlestick oscillator is divergence. Divergence occurs when the price is moving in one direction, but the oscillator is moving in the opposite direction. All right. Now, I just want to see if we can find a good example. I want to see if we can find a good example here. Um, okay, I think we have a good example here. This is going to be the case of a bullish divergence, right? You can see that the price made lower lows, but the indicator made higher lows, showing that a bullish momentum was incoming, showing that the bearish momentum was getting weak. And you can see that after that, we had a significant, bullish reversal. Okay. Now, let's talk about crossovers. Another key signal is when the oscillator crosses the zero line. A crossover from negative to positive typically signals the start of a bullish move, and a crossover from positive to negative indicates a potential bearish move. Okay. Now, how do we incorporate this into our trading strategy? Well, it depends on your trading style and time frame. For day traders or scalpers, using the Ergodic Candlestick Oscillator on shorter time frames like 1 minute, 5 minutes, or 15-minute chart can be extremely effective. The oscillator will help you spot short-term momentum shifts that can lead to quick and profitable trades. Okay, so you can look for divergence and zero line crossovers to identify potential entry and exit points. Then for swing traders, you may want to use the oscillator on slightly higher time frames like the 1 hour or 4 hour charts. This will give you a clearer picture of medium term momentum, helping you spot trend reversals and continuation patterns. Here you can combine the oscillator with other tools like moving averages to confirm trends before entering a trade. Now, for those with a longer term perspective, the Ergodic Candlestick Oscillator can be used on daily or weekly charts. To help confirm trend direction. The longer the time frame, the more reliable the signals will be. So this will help you stay in a trend for longer and avoid getting shaken out by shorter term fluctuations. Okay? So imagine if you are looking at a 1 hour chart. Now, okay, let's just go forward a bit, right? Let's go forward a bit. Now. And then the price is trending upward, right? Price is trending upward. But you notice that the Ergodic Candlestick Oscillator starts to dip below the zero line. You can see around here, even here and here, right? It's signaling loss of momentum. At the same time, you see a bearish candlestick pattern forming. You can see this massive red candle that formed. This will be a strong indication that the upward trend could be weakening, and it might be time to exit your position or prepare for a short trade. So had it been you had exited here, at least maybe you had entered here and exited here, you would have caught some good number of pips. And then, perhaps you can just enter after you get a confirmation. You can enter a sell trade after you get a confirmation for this bearish reversal. On the flip side, if the price is in a downtrend, but the Ergodic Candlestick Oscillator begins moving above the zero line around here, you can see what happened here. It could signal a bullish reversal. A crossover of the oscillator to the positive side combined with bullish candlestick pattern could be a solid entry signal for a long position. So incorporating the Ergodic Candlestick Oscillator into your trading strategy can significantly improve your ability to spot trend changes and momentum shifts, giving you a competitive edge in the market. Whether you are a scalper, swing trader, or even a position trader, this tool can provide valuable insights and help you make more informed decisions. If you found this video helpful, don't forget to hit that like button and subscribe to the channel. We post new trading tips, strategies, and analysis regularly. Also, drop your questions or experiences with the Ergodic Candlestick Oscillator in the comments below. I'd love to hear how you are using it in your trading. Thank you for watching. Subscribe for more trading insights. I hope to see you in the next video.